What's up, everybody? This is Jimmy with Decoded. It's February 27th, 2025, and what a hell of a day in the market it was today. But before we get started on today's video, I do want to give a shout out to the few members that decided to share their progress for the week. I'm going to show those on the screen right now. Now, normally this is not something that I would do, but it was a good week and a much needed week for several of the people in our community. You know, trading is not easy. It's very difficult, not because you can't understand when you should execute your trades, but just because it's an emotional roller coaster. So I did tell these folks that I would give them a very well-deserved shout out. So good job to you guys. There are a lot more people that did well, but I respect their privacy and they don't like to share their numbers. And as you'll also notice, I only share the percentage growths because the dollar amounts does not matter. It doesn't matter at all. In fact, progress is what we're aiming for. We take fewer trades and smaller trades. We just try and use those trades to build up our accounts over time. Now, the growth that you saw on the charts for these guys, once one guy started with the thing, that's when the other people started to share their numbers, was on the 1 week, so on this week alone. But let's go ahead and talk about the charts today. But before we get into that, consider buying my book. They all did, and it's helping them. Results are not typical. I got to say that for legal reasons, but these guys are doing very, very well. So let's go ahead and take a look at the charts. And we're going to do something a little different today in that you're only going to see one call put line on this chart today, and it exists right here on the Qs. Why does it exist on the Qs? Because the Qs are really all that matters to me. Now, today was interesting because I said I don't feel comfortable buying calls if we get above pre-market high on the Qs, this blue line here, because of the level of congestion. These are levels of resistance that exist on the chart. I said I don't feel comfortable buying calls up there. So the only way I would buy calls is if we were to pull back to the pre-market midline. ADD was printing green, which at the time it was, and it looks like it's trying to hold. Now you're thinking, but Jimmy, what does it look like to try and hold? I said, as soon as I see a wick starting to develop on the bottom of this candle and ADD is green, I'm good. So for me, I went ahead and bought calls. Now today was extremely expensive, which we were prepared for because, well, the expected range today was pretty high. So we were prepared for expense. Maybe some of us not quite as prepared as we thought we would be, but that alone created some hesitation for people, and it's totally understandable. I got in, didn't get out. I wanted to get to the blue line. We pulled back, so that trade got uncomfortable here for a moment, but ADD at the time was still green, so I was like, okay. And most of the top 10 was very green at this time. Almost everything in the top 10 was green. We held support, and we moved up to the line I really wanted to make it to, based on pre-market. That's it. And I knew I didn't want to hold on to calls through this level. I did try and push a little bit more, which wasn't really a big benefit. This trade ended up working out, but it wasn't a huge win. Okay. Now, if I would have held a little longer, it would have turned into a very, very nice win. But this one here, as it stood, was only about a 7.5% winner. With that said, we did push up, but I wasn't buying calls because of this mess here on the Qs. Then, the same line that we were using for calls, I also said if we can close below that line, that would be my trigger for puts, and I'd be hoping that the Qs make it all the way down to this line right here, this support. First, we wanted pre-market low, okay? But it's deceiving because this right here is an 83-cent drop from line to line. So it's not like these are small moves. And even if you waited for the candle close on the Qs, by the time we closed, you still had 30 cents to go before we were going to hit the blue line anyway. But if we got through the blue line, we were looking for the next level of support down here, which, well, we got to. And then if we close below that, we're looking for the next line of support down, which was here, so on and so forth. Okay, so the entry was because we closed or breached this line to the downside. But at the same time, ADD stopped moving up. So it was just kind of chopping sideways. SPY was coming down, breaking supports. Qs breaking supports, close below support. There was room to the next support. That's all there was to it. That's not the real fun one. Now, as you guys often hear me say, and you watch, if you watch my videos, we like to buy pullbacks when we're pulling back to resistance. Now, admittedly, I called this one incorrectly, meaning somebody had asked me, Jimmy, would you buy a pullback to this resistance? Both charts are at resistance. And I said, I wouldn't. Now, the reason I wouldn't is important because I have a very set of rules about when I buy pullbacks and when I don't. Okay. Same thing with when I'm getting into trades aggressively versus conservatively, right? In this case, the pullback to resistance was a solid one on both charts. But what wasn't looking good to me at the time was the size of these ADD candles going up. Now, mind you, the stock market as a whole was very green today. So I wasn't expecting at this point a big sell-off today. I was wondering if this was still just going to be a pullback, we find support, and then we start running back up. I had no idea. I can't see the future, and neither can anybody else. So what I use to justify whether I buy pullbacks or not is, are we trending up on ADD or printing green, or are we printing red? Okay? During both of these candles, they were big green ADD candles. I'm not buying puts there. I'm sorry. And I said, when this person was asking, I said, if it works out, I apologize, but you're asking me what I would do if I would do it? And the answer is no. And here's why, which is what I try to do for everything we talk about in our room, guys. I am not, look at this, should not be white, pink, by the way. That's supposed to be white. I didn't take this trade, but I did take one after it. So what I'm looking to do is follow my rules. And what triggers my buys and my sells is what I'm trying to teach people in this community and in these videos. A pullback, even though it worked out after the fact, I would not have bought this. Right? I'm not going to tell you, yeah, I would have, just because I know it worked later. That's not good. That's not helpful. This is asked and talked about in real time. Jimmy, would you buy this pullback? I wouldn't, and here's why. Kept me out of a ridiculously good trade, but hey, that's my rules, okay? But what I did realize is that, guess what this is? It's the first lower high that we're putting in for the day. Lower highs are bad for calls, so now puts are on the table for sure. If you didn't take any yet, this is a lower high, so I'm expecting support to fail. And fail it did on the Qs. Now, I'm talking about the Qs because everything that I did today revolved around the Qs chart, just like it does every other day. So I'm sorry to bastardize or ignore the SPY chart. I told everybody this morning, the levels of SPY don't matter to me unless you're only watching SPY. I watch the Qs and then I trade SPX because it works hand in hand. It's very rare that they don't go together in the same direction, okay? So what I did do is wait for a close below this support coming off of a lower high. We found support here. We pulled back and I said, all right, ADD at this time was not printing green or red. It was moving sideways, but I started to notice the wicks on top. Finally, when ADD printed a big red candle at 950, that gave me the confidence to say I'm ready to go. Got into this trade at 951, knowing that if we closed back above this resistance on the Qs at 514.19, that was my stopping point. As you could see, our first target that we were aiming for was modest right here. It still has the alert on it at 513.02. That's a 50-cent drop, okay? That's a good paying trade. What we were glad to get was a close below that line with ADD still dumping like crazy. I said, guys, I'm holding on to this. ADD is looking good to the downside. I want a good winner here. We got down, we moved down, we got to the pink line where I was really considering selling my position. I said, you know what? ADD still looks strong to the downside. I'm going to hold on to this, but I'm going to tighten up my stop significantly. That was the kiss of death for me. Basically, put my stop loss in place. It immediately pulled back to test the pink line of Qs. It held, but I had already gotten stopped out only to watch this thing drop significantly. Left a boatload of extra money on the table. But guys, what I need to point out here is that the put scenario from entry point to exit was almost a $7 move to the downside. Were we expecting a $7 move to the downside? Of course not. But man, if you could just find the right reasons to take the trades to begin with, it opens up the opportunity, at least for you to capture a $7 move. Now, I have a hard time holding on to trades that long, but there was nothing on this chart until you got your first pullback that would have had you feeling uncomfortable while you were in that trade to begin with. So we had a ton of folks make a whole boatload of money in this move to the downside today. And then we found a support that both Qs and SPY were hitting at the same time, right here. This is something I say all the time. You guys watch my videos, you know. And more importantly, we started to print our first green candle on ADD since that massive drop to the downside. We always have to take that into consideration, guys. If Qs and SPY hit support at the same time to start, and you look at ADD and it's no longer barreling down, just know that there's some buyers there trying to prevent the move from continuing down. We don't know if they're going to be successful, but at least if you have those things in the back of your mind, you could say, okay, this might be tough to get through. Let me adjust my stop loss. Let me decide to take profit, whatever you decide to do, but just protect the profit you've already made somehow. Right? You can put a stop loss somewhere. It doesn't have to be right near the price. Put it somewhere so that if it does hold, like it did in this case, you don't give up too much of the profit you'd already earned, okay? Now, we pulled back. No level of resistance here. I would have been looking for the orange line here as the resistance for pullback. SPY didn't make it to its resistance either, so no reason to consider buying here yet. But what we would have expected to do was come back down to support, and it did not do that. ADD had started to print green candles. We pulled back. We put in a higher low. Guys, we talked about this in real time. Said, hey, 1008, guys, higher low. Careful, that's not good for puts. Which usually means calls are on the table and puts are likely to lose, okay? So if you're in them, get out of them. If you were thinking about getting in them, skip the idea. If you're looking for a reason to take calls, well, there's two opportunities here. Number one, you say higher lows, we're more likely to break resistance. Well, your first resistance is right here. We did break it. You got to know where your next resistance is to know whether there's enough room to justify a trade. The next resistance was right here, okay? So from the break of resistance at 509.72 to the next resistance up at 510.70, almost a full dollar move. And that happened literally in 1.5 minutes. Okay, now if you wanted to wait for a close above the next resistance, which gave you the opportunity for the next resistance up, which was all the way up here. Okay? Told everybody, guys, if we get above this, the next target high is pretty far away, and it's all the way up at 513.88. Okay, so again, a big move from 510.66 to 513.88. It's almost a $3 move. In the whole time, look at what ADD was doing. So the conservative entry, which would have given you the best opportunity for the potential largest move in this reversal, or whatever you want to call this, with the least amount of problems that we could be aware of, existed from this resistance, knowing where the next resistance was. And I'd like to point out where this candle stopped abruptly. So we did have people take this entire trade here. Some got in a little later because we said once we closed above the pink line, guys, I know we're struggling to move up, but ADD feels like the buyers have the upper hand. If you're looking for a pullback to buy, that pink line is a good opportunity. We'd still be aiming for the same resistance up, and there's plenty of room to make money if that happens. And so the opportunity existed. We got through the level, and for everybody who got in at either point A, point B, or point C, got to take advantage of a nice big winning trade. And that's what we're looking for. Then we hit resistance and we pull back. We put in a lower high and we say, okay, this support's more likely to fail. And if it does, we're more likely to get down to the pink line. Well, it did fail and we made it down to the pink line. We did close below the pink line, but we did not make it to the next support down in this case. Okay, so if you happen to be in puts, you happen to get in when we close below the pink line, that pink line also becomes your stop loss. So if we close above it or we don't make it down to the profit target, you got to consider getting out of the trade because it might be a higher low. You won't know, okay? You won't know until it's too late. So you got to know where you're going to stop out, right? Have a stopping point. If you got in up here, you might be saying, I'll wait to see if this becomes a higher low. But if we don't make it after closing below support in a downtrend to the next support, you've got to look at that as buyers getting stronger, okay? Then we put in another lower high. So this turned into a wedge, which we drew. Okay, I said to everybody, if we break the wedge high, there's not a lot of room for profit. We're going to run right into resistance, which was this orange line right here. We did that. We closed above it and ran right into resistance. Okay, but if we close below the wedge to the downside, our first target would be the support that we made just a few minutes ago. We closed below it. We got down to it. We closed below that. We're looking for the next one down, which I'd like to point out again to the penny. Okay, if you choose to hold on to these things, just move your stops down as we go. If we don't close below the line, consider taking your profits. If ADD is not printing red while you're in puts, consider taking profits. We don't know which levels are going to hold and which ones are not going to hold. What we do know is that there's buyers there because we tried to move lower at one point here and we couldn't. Why? Because buyers didn't allow it. Same thing with here, okay? We didn't know they existed here before, but now they are. So we are looking to make it to that level. We tried to stop at that level. You could see this little green candle here. We pulled back. We got to support where the buyers were there before. It tried to hold. The buyers couldn't win, so the sellers took over and brought us to the next batch of buyers, which is right here. Will those buyers win? We don't know, but we know they're there. So we got to be prepared to do what we want to do when we get there. So all of these are our exit suggestions based on support levels that we've made on the chart. It held. We put in a higher low here, but conservative rules. We had resistance here. We're expecting it to break, but you still had the trend line to deal with. ADD at this point started to trend back up again. So as luck would have it, we had a bunch of people get in here. I had one guy get in here at 11.11. He got out here for a 40% win. Good job, Delane. But point is, I have some traders that say, hey, a trend line break is good enough for me. We're coming off of higher lows. I expect the resistance to fail. So they get in. And what were we aiming for? First resistance was right here. We got there. Second resistance was right here. We got there. Third resistance was the orange line, followed by this guy right here. All of them hit. Well, if you want to determine what keeps you in those trades or not, simply look at ADD. If ADD is no longer pushing up while you're in calls, maybe you should consider that less strength to the upside, and maybe that becomes the reason you take your profits. If it's barreling in the other direction when we come up to a resistance on Qs and SPY at the same time, I wouldn't hold on to that, but that's up to you. It's your money. You do what you're comfortable doing. But what I would suggest to you to do, as you hear me say 1,000 times a day in every video, I'm sure you're tired of it, is protect your money. I don't know why I have to constantly remind people to protect their own money. Why don't you want to do that on your own? Stop worrying about whether you're going to miss a home run. Stop trying to make up for the red day you had yesterday today. It's going to come. If you start making better decisions more often, you will become a profitable trader. That's what makes it work. Stop chasing yesterday's losses. Stop trying to fix what you did wrong yesterday. Every day is a new day. Take the chart for what it's telling you. Follow the chart, not your heart, okay? I'm telling you guys, this is doable. Today was a great day in our community because people followed their rules. And those who followed their rules did great things for their account this week, as I shared with you before this video even started. Okay? It is doable. And you just got to keep repeating the process that is trading your trade plan. What we do works when you implement it properly, just like any other strategy. But the problem is our emotions don't always allow us to implement the plan properly. There's no way around that, okay? So as we got up here, I reminded everybody, last time we touched this level, we got a pretty nasty reaction. You might not want to hold on to that, especially if ADD starts to move down. We were struggling to move higher on both charts, made that abundantly clear, and then ADD started to go down. I said, guys, careful. And down we went. Where were we going? Well, we were expecting it to come down to here first, which it ultimately did much later. But as we moved down, ADD is moving down, we got to the pink line and we pulled back and we had a lower high. And I said, well, that lower high means we're more likely to break support. If you're buying puts here, Your stop loss has to be a close back above 512.12, like it was earlier this day, I think. Yeah, over here. We're looking for the next support down, which on the Qs was 511. And then we said if we get through 511, we're looking for this support here at 510.48. And then if we get through that, we're looking for this guy here, okay, which held once here, but ultimately broke, held here on the way back up, held here for real this time, and it tried to hold here. So for people who held on to puts, that become our new stop loss. If we stay below that line, the next line down, as I made abundantly clear, and I just had a conversation with somebody right off got off the mic. He's like, why were you so sure that we were going to head down to 509? And I said, I'm not sure. I said, but if we close below support, I believe we're going to go down to the next support. Well, that was right here, okay, at this higher low, and it's at 509.05. Okay, if we close below that, I believe we're going to head down to 508. Well, 509.05, what happened the last time we touched it? We rocket shipped up. Likewise, what happened this time we touched it? We rocket shipped up, getting to old levels of resistance. Each time we cross resistance off of higher lows, we're expecting higher lows to break resistance. Guys, I feel like a broken record. You don't have to trade the way I do, but just watch how often the things I'm trying to teach you play out. If you are trying to buy puts off of higher lows, you should expect to lose more than you win. Okay? It's a bad recipe. Just watch how often higher lows produce a move higher. It's the start of an uptrend potentially. Okay? Just like lower highs. If we don't make it back down to support, okay, you're putting in a higher low, it's bad. But just start paying attention to these things. Right? So I was already getting off the mic because I was trying to wait for Steve to bring us down to that line. I had an alert down there at 509. But I decided to come back on the mic a few minutes later after he did ultimately bring us there. And we never closed above the line we needed to stay below. And I did say if SPY gets to the pink line or Qs get to that beep first, that would be the time that I'd be leaving. I didn't stay until then. I left 6 minutes before then. But nonetheless, guys, knowing these levels is important. You see, this is doable. And you don't need 1,000 indicators. In fact, I believe that if you have more indicators on your chart, you're less likely to trust what you're seeing because then you become too reliant on the indicators. Your eyeballs are your best indicator. And the only thing you lack right now that prevents them from being your best indicator is your ability to have confidence in yourself and what you're seeing. Watch my videos. Read my book. I am telling you everything you need to know that stacks probabilities in your favor, and I don't use a single indicator to do it. Do I have a 100% win rate? No, of course not. Nobody does. But is my win rate high enough to pay my bills? Absolutely it is. And another thing that we were discussing today is that I believe that people's win rates are not as high as they really could be because they also don't know when to walk away, whether they're having a good day or a bad day. I promote trading less often, not more often, because I truly believe in every single trader that I've asked has answered this question the same way. So I ask you to ask yourself, do you find that the more trades you take per day, the higher your win rate gets? If you answer that question honestly, it's probably no. Which leads to the next question. If you were to walk away after you have your 100% win rate for the day, would your account be in a better standing now than it currently is? And most of the time, the answer is yes. Knowing when to walk away is a huge, huge part of this business. And sadly, that answer changes for people depending on how much or how well they perform on their first trade of the day. That shouldn't be the metric. The metric should be, are you trading under emotion? If you're trading under emotion and you haven't traded yet, walk away. Today's a no trade day for you. If you took your first trade and you're ecstatic because you made a lot of money, that level of emotion is going to force you to be a little bit more careless in your next trade. Trust me. That's how it works. If your first trade was bad, you're upset, you're red, you're ruining a green streak, whatever it is, you'll find a reason to take a second trade to fix the first one. But then we get into a very dangerous scenario. What if that second trade makes things worse? Do you think you're going to be easier to walk away after the second loss than you were the first one? Hell no, you're not. Most people will get more aggressive on their trading, scale up so that they can fix two problems now quicker. And if you don't believe that that's what's true, I would bet you've already done it as a trader yourself. I know I have, right? And that's where the rule for me, if I have 2 red trades in a row, I'm done. That's where that it comes from. Okay? Because I know for a fact that that third trade is either going to make me even or green on the day, or it's going to make things way worse. Okay? You have to be aware of when you're under duress because of your emotions. If you watch today's charts and you didn't take any trades based on the setups that you saw or we found, the question is why? And my answer to you would be because emotions prevented you from acting. Whether it was the cost of the trade, whether it was because it moved so much you couldn't believe that there was any room left to make any money, whether it's because you have a call bias while we're going down, or vice versa. But don't ignore the fact that you're not trading because of emotions. Because when you do decide to take a trade that is emotionally driven, you will not treat that trade the way you should. You will not trade any kind of plan whatsoever. And that is the worst way to trade. Okay? So I'm sorry to go on the rant, guys. Even though we had a great day in the market today, there are some people that don't have a great day on a day like today. And I want to help you too, okay? The reason I get up every day and get on this microphone is so that I can help people do what the majority of the people in our room did today, and that's learn how to make better trading decisions. It keeps me busy, and I feel good trying to help other people. That's why I do what I do. Do you pay me for that service? Do you pay me to be at your disposal from 9:30 or 9 in the morning till 12? Yes, you do. Why is that? Because I value my time, just like I would value your time if you were spending it helping me. Okay? So, with that said, we're going to wrap this video up. If you're interested in learning how I trade or what I teach, consider buying my book if you can't make it into our Discord community. If you can make it into our Discord community, the people who have bought my book within that community are finding that they're learning more in conjunction with being here and having the book than they were by just being in the room. Okay? So it is helpful to people that currently exist in our Discord and for those who can't be in our Discord. There's good information in that book. Check it out. Also, if you'd like to find or join our Discord community, there's a link down below. We'd love to have you. First week's completely free. No credit card, no payment, no nothing. No sign up. Just show up. Click the disclaimer and join us in our live trade rooms, okay? Lastly, if you got any useful information in this video, please like, share, and subscribe. I'd appreciate it. I'm trying to grow this channel without doing clickbaity bullshit, without sharing big numbers. It has nothing to do with that, guys. I want to grow my channel organically, because enough people are finding value in these videos. All right? That's why my channel hasn't blown up. I'm not putting the thumbnails out there with Lambos and Porsches and Ferraris and stacks of money and all the shit. Okay? I'm just trying to give you quality information. I don't want to be that guy. All right? So please, if you're not subscribed, but you do enjoy the content that I share and it is helpful for you, please consider becoming a subscriber. My true drive, not only to help, for me personally, is to earn a play button from YouTube. That's it. That's my whole goal of being on YouTube, because they don't pay for shit, just to be clear. I'm going to make $230 this month on my channel from YouTube. And that's pretty much it. So, you guys, I hope you had a fantastic day in the market today. If you didn't, sit down, process what you did wrong. If you didn't make any mistakes, it just wasn't your day. If you did, learn from the mistakes. All right. And without saying any more because I'm rambling. Just know that I love you, and I hope you have a good rest of your day. Till tomorrow. See you!